Okay, quick video. Just wanted to go over the gamma exposure model that I've been trading. I learned from Matt Coart with Rocket Scooter AI. I've done my own homework and studied gamma exposure, and that way I have a conviction and a good understanding of it. It's definitely been life-changing, and it's the whole reason why the market reverses in the first place. So when everyone talks about market structure and all this hoopla, I understand, like, you know, higher lows, lower highs, but what causes that? True market structure is where the dealers are hedging their positions. And anyways, not to go super nerdy or get super in depth on that, it's the whole reason that the market moves. And everyone talks about the market makers and being boogeymen, but they're just the ones that create liquidity so that we can buy and sell and transact on the market. So anyways, every single day there are gamma exposure levels posted, and it is using the options market of where the dealers are hedging based on how many calls or puts are being bought and sold. So again, not to get super in depth or nerdy, but just wanted to share that when you use these levels, they are like pinpoint, like to the penny, because they're using strikes on SPY and QQQ when we're trading NQ and ES. And this goes for Tesla, Nvidia, gold. You can get these levels on all of them. And I use Matt's Rocket Scooter. He has his own levels, but I go and get gamma exposure levels off of Geeks of Finance, or you can just go on Barchart and you can pull this up. So I just mark out the levels, the highest absolute gamma exposure, and also high positive gamma. So I just mark them green, and high negative gamma. And I have some other levels down here, like 6 feet. But you can basically, you're already ahead of time, before the market even opens, are able to predict where there's going to be high volume, because the dealers are forced to hedge at these levels. So anyways, we marked out 670 today. I also had a low volume node on the volume profile, which I can show you like super quick. I'm not trying to make this a long drawn out video, but let me just go from here to here. This low volume node right here. I actually got this from the order flow. Like, this is on just only like tick data on, see, that's way bigger. I'm trying to pinpoint levels, not that they have to be so perfect, but I was going off the actual order flow on the level 2 because I have Bookmap. So I marked out on the Bookmap where there was actually a low volume node. On top of that, I had my high gamma strike, which was 670 on SPY. So as we were selling today, we were approaching that level. We broke the gamma flip. So just super quick, the gamma flip is where we go from a positive gamma environment to a negative gamma environment. Negative gamma just means that the dealers, it's just letting you know what the dealers are going to do to hedge based on what's going on with price. So below this line, price is going to get more volatile and violent. This obviously wasn't extremely violent. We were overall positive gamma to open the day. So when we broke this, yes, candles got larger and more impulsive. But what happens is the dealers are going to sell with selling. So they're going to amplify the move. And then if there's buying, they're going to buy into buying to hedge. Where in a positive gamma environment, so above this line, what's going to happen is when there's strength, they're selling into strength. This creates a balanced or liquid market. So when we get negative gamma, we're looking for price to become more violent. This wasn't so bad today. We had larger impulsive candles, but it's fairly stable. We just barely broke that, and we didn't have a lot of selling on the level 2. But anyways, we had this level marked out literally to the penny. We had other days where I posted levels we had, and it definitely was way more violent, breaking that gamma flip. I post these and mark these out every day in the group. But anyways, not to get too far off the beaten path here. Below the gamma flip zone, we are in negative gamma. Price is going to become more impulsive. If they're selling, the dealers are going to assist that move. If there's buying, they're going to assist that move. So that's why a lot of days you see that large sell-off and then a violent V reversal back up like we've gotten like these days down here. So large gamma level. We had the flip zone was, I think, like right here this day. I can't really remember. But you can see price is tighter. You know, we're having larger selling. The VIX is high, so that means we're illiquid, which I won't get too in depth on this video either, but tighter. And then we broke, it was somewhere in here. But anyways, once we broke, we became more violent, and then we were getting large selling. So what we look for is when we have these high negative gamma levels, we look for reversals off of them based on what the dealers are going to do. They're going to start buying. Once there's not really any more gamma levels to the downside, it's going to get bought up. So what we look for is an overshoot and then a reclaim. So obviously you're getting some type of buying consolidation here. They're going to get one last push, and then once all the deltas are hedged, that's when it reverses. So it's not that, oh, we have buyers in the market. We have buyers here. We have buyers all in these areas. We had buyers in here. We had buyers here. But that's what happens with these sweeps that we get, is we get multiple sweeps. You get double swept. Sometimes you get into a position and then you get taken out before the market reverses. Everyone always talks about that, but what they don't understand is when you're in a negative gamma environment, what's going to happen is the dealers are going to assist the move. So if there's any selling at all, they're going to push, and they're going to push it until the last deltas are hedged. I'm not getting super in depth on this. I have a full course on it. It's super simple, like a beginner course, but it's super advanced stuff. I just try to simplify it so that way you understand what's going on. But that's why we get these like double, triple sweeps. So we got a sweep here. We had buying, right? Selling came back in. Dealers clearly assisted the move. That's why it's way more violent. We bottomed out, and then what do? We got one more sweep, right? So yes, you can go off high gamma levels and just blindly take them. So I had a level here and I had a level here, right? So I'm trying to learn this like tool. So I had a level here and we had a level here, okay? So I could enter a first long position here, and then I can add another long position here, right? And then I could just have my stop, you know, a strike or two lower. So like 658, let's just say I had my stop loss at the next strike, which is going to be about 10 points on the S&P or ES, which is what I trade. I trade futures, but I'm going off of the SPY options data. So I could just put my stop, you know, below this strike, and then cool, because you know that you're losing a level if you're trading to the next strike. It doesn't mean a candle closure. It doesn't mean anything. It means if price touches the next strike, you lost this level. It doesn't mean you can't reclaim it, but if it's going to trade to the next strike, you lost the level. So that's why you can use strikes or half strikes if you want for stop distances. What I do is I do watch the order flow, but we look for price to bottom out. We look for one last push, and then once we get some indication that they're hedged, the selling has died out and we get that strong reclaim, that's like price snapping back into the range, which is what you get with these, you know, large candles, call them fair value gaps or whatever, is when you get these strong reclaims, it's price snapping back in, and the dealers are now hedging with price back up. So they're hedging by selling. Once all the deltas are hedged, the last one is hedged. Now the buying starts coming back in and they're starting to hedge back up. All these puts and shorts are getting closed. You sell your put, cool, made your money. Now they're going to start hedging back up and they're going to have to start buying back up shares of the underlying or buying back futures, which is how they hedge, right? So we're looking for areas where they're basically 100% they're going to have hedging going on. That's why you're going to get volume. But where you're actually going to get true legit reversals because they're going to have to hedge in that other direction. So like this obviously is an indication like, yeah, we're snapping back. You can take this thing long and you can go target, whether it's the, you know, I had a gamma flip zone in here or some other high positive gamma level that we have to the upside. So I do remember this day it was 665 and this was a positive gamma level. It's negative now, but this was a positive gamma level as a high gamma strike. So price is going to gravitate towards high gamma levels because they're liquid. So if you're buying a lot of, you know, calls or puts, you're going to have a lot of hedging and, you know, buying and selling activity at those levels, whether you're going to be closing your calls or your puts, and the dealers are going to have to hedge based on, you know, what's going on at those levels. So if it's a positive gamma level, they're selling into the strength they're buying, and then they're buying into the dips. Once we break negative, that's when the hedging model changes. They're selling, accelerating price into selling, and they're buying into buying. So that's why we want to be really careful with in a negative gamma environment, is we really want to look for volume exhaustion. And yeah, I mean, we got some strong, you know, buying here, we got some strong buying here, right? And this was a really good move, but we still had selling in the market, and I can't really remember, but I do believe the gamma flip zone was like kind of right in here where we kept tapping and it continued to push lower. So anyways, again, this is your snap back candle. That's where you snap back into the zone, and that's where dealers are going to start hedging with price on the way back up. So anyways, that was on a really sell-off day. Today, we're a lot more bullish. We obviously had this, you know, strong push up yesterday. Again, same thing. We had a gamma level. This was a positive gamma level yesterday, and that's why we had this fairly slow grind up. And what happened was we broke it with volume. We retested, and then we were trading higher to other strikes. I don't have the levels that I had marked out, but I do know I had 670 and it was a positive gamma level. So when you're getting selling, they're buying the dips, selling, buying the dips, selling, buying the dips, right? So the dealers are hedging by buying the dips, and then when you're buying, they're selling into rips, right? That creates the liquidity. And then we had a super high gamma level we pointed out, 672. It ended up becoming, I think 670 was the highest gamma. And then once we got above it, later in the day, 672 became the highest gamma strike. And you can see resistance, resistance. We got above it, become exhausted, sold off, sold off. You can see how accurate these levels are. Honestly, a lot of times we don't really get like too far above it, and we do. It will, I don't want to say never, but it will typically never get to the next strike. So we're at 672, 673 was the next strike. We didn't even come close. We didn't even get to a half strike distance, which would be right here. So again, that's about 5 points on S&P, by the way. So anyways, and yeah, if you get a break, right? Look, you break above, once you close back into the range, boom, you can take a short. I don't short the market because we're bullish, and even when we sell off it gets bought up, and like 70% of daily candles give back more than 30% on a sell-off day, and same with monthly candles. So, you know, the market always goes up. But not saying you couldn't take a short if you wanted to. I'm just a lot more confident with longs because that's the direction of the market. So anyways, and yesterday I was looking for this level to get tapped, didn't get it. I missed this retest. I would have much preferred here, but didn't get it. But nonetheless, high gamma level remained into today's open. So that was the level we were looking at. And instead of just buying on every single bit of strength, we look to trade off of our pivots, and I use order flow for confirmation. Unless I'm super confident with the environment, I can just place a limit order or just buy when it taps. And sometimes I'll do that with one account, and then with another account I'll trade, you know, with some type of confirmation. I separate my risk by separating my accounts I trade. I hit them at different levels, which obviously diversifies your risk. Doesn't mean I'm gonna lose, but if I do lose, I'll be stopped out at different places, or maybe I'll get stopped out on two accounts, and then on my third and my fourth, I make a large profit. And I also, sorry, super late, I'm getting a little tired here, but I fine tune my entries now with order flow, so my risk versus rewards are pretty good because I can see inside these candles when we're gonna get reversals or we have exhaustion. So I like being in first. But anyway, so yeah, so we flipped into a negative gamma environment. We were looking for, you know, strong selling or some type of exhaustion or selling. We want some violence here, impulsive moves down. And then, you know, we want some type of bottoming to happen, which we honestly didn't get a lot of violence to the downside. We just pretty much once we broke, you know, we had some strong impulsive moves. You can't really tell by the candles, but they were pretty fast and impulsive in the morning, but we were bottoming out. So that tells me we have buyers entering and we're not getting a lot of strength to the sell side. So as we trade lower into this pivot, we want to see those deltas being hedged by the exhaustion. On the order flow, we're seeing less sell volume coming in. It's drying up, and that would mean that we're more than likely going to get a reversal in the other direction to go find some, you know, sellers. So, and especially once we get buying in, price is going to push higher. So anyways, saw this. You could have taken the confirmation on rather than the tap. Once you got this closure and you got some buy volume, again, I don't trade candlesticks, but if you're a candlestick trader, right, got a closure above the last down candle, you got a sweep, and we had a high time frame sweep over here. Swept a low, swept an internal low. We tapped our level, and we're snapping back into the range. Had some strong buying here. Selling, tried to fight it. It's drying up, and we're getting buy volume in at this point, I'm pretty sure, from the order flow. I'm looking at Bookmap. Yeah, we started getting some buying there. So anyways, and then once we broke the gamma flip, strength, 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 and now dealers are selling into strength. We get another push down, and then what do we see? Some bottoming. Get one last push, snap back, or reclaim if you want to call it that, right? We reclaimed, and then we push higher. And we knew that it was looking to push higher because we had a high gamma strike at 672. I marked all this stuff out. I'm not just like, you know, talking about this in hindsight. This is at 9:49. So we had our battle plan for the day posted at 9:09, and we had our zero gamma level, Our absolute gamma strike, our strongest magnet was 675, which is still a target. We didn't get tapped today. The VIX was in decline, so that means we're more liquid. And we had 671 and 675. We were looking to expect chop and retest. And what do we get? 671 up to 675. We're getting chop and retest a lot. So that was our, pre-game game plan that we had. I had levels marked out on the charts for ES and for SPY. These were all marked out today. And then at 9:49, looking for bounce off 670. Sustained volume target 675. Immediate target was previous day close in 672 SPY. So what do we have? 670 was our target that we're looking to take a trade off of. 670, or oops, right here, 670 for a bounce. And our immediate targets was the previous day close in 672 SPY. 670, we got the tap to the penny, snap back into the range. Could have bought here, could have bought here. I entered in this candle right here. Yeah, I actually did. It was entered in this candle. There was a limit order. I'll show you guys on the Bookmap. But there was a limit order, and then there was some volume came in. Let's see how much it was. 771. So it was decent enough volume. It got blocked up, and then we got like strong buying volume coming in. And typically we get that one last little push with it trickling out, but we got enough buying volume, price started pushing back up. So anyway, so 670 was where we're looking for a bounce. And then once we reclaimed that zero gamma level, we knew that we're in a positive environment, was looking for a retest in this region. Didn't see any confirmation. And then on the order flow, you'll see it more clearly, but just on candlesticks, you got a little bit of buying, right? You want a little bit of bottoming. You want buying to come in and say, hey, we're interested here. Price likes to make one more push to see if there's any suitors, if you want to call it that want to sell. And once you see that dry up and an immediate snap right back into the range, that's where you want to take it long. Now you have a good stop placement, tight risk. And then targeting 672, we broke the gamma flip, we retested it to the penny, and then drove right to 672, got above it. Dealers start hedging by selling into strength. What do? Go retest it, just like we were talking about with that chop. Bottoming, strong push, boink, took the low, strong push, you can see. We snapped right back into the range. Could have entered right here. Actually did take this trade. I don't know where I got out, but I have to go back and look. But that's not important. My trades aren't important. It's just marking out what you guys can do because you guys are better than I am. But bottoming, one last violent push, snap back into the range, traded higher. And where did we go to? 673. This ended up being a super high gamma strike. It was somewhere midday. This ended up being a super high gamma strike, and you can see dealers are hedging by selling. And this is like not a joke. Like, I can't fake this. This is like to the penny. This happens all the time. I mean, even like this isn't just one day and like some special magic thing. This is what everyone talks about. It's like, oh, it's a market structure. It's like, market structure is past information, and it's highs and lows and all. There's highs and lows everywhere. Higher lows, higher highs, they're all over the place. It's like, how do you know which way's up? It's not a wonder why so many people have a hard time trading, but you can see these are like super pinpoint. These aren't like hindsight, like supply and demand, support and resistance. Like, this is the big boys. I mean, it is support and resistance, but this is the big boys and true support and resistance because this is where they're hedging. This was a high positive gamma level. The 670 was a call wall the other day. Now it's a negative gamma level now that it's below price, based on the gamma strikes that we have. But you can see like to the penny. So when you start seeing sweeps and all this stuff, it's like, it makes sense now. It's like this invisible world, and it's going based on strikes that the dealers are hedging at. This was another positive level. We got a little bit of buying. We got a, right, bottoming a little bit right here. Sweep. We pushed with sellers. We snapped back into the range, traded higher. Price didn't want to go higher. We got selling come back in. And we're pushing in a negative gamma environment. The dealers are amplifying the moves. They're accelerating it, right? Until what? A little bit of bottoming, okay. Push through, strong push. Deltas are hedged. Snap back into the range. What do we get? A reversal, right? Happens every day. These are so accurate. You can see where it's like, we're already anticipating where all this is going to happen before. It's predictive. It's ahead of time. So we can already just mark out our levels, right? Oh, bottoming, right? We see bottoming. Do you see any bottoming, little tiny bottoming here, right? No bottoming. This is like the tiniest little rally-based rally, if you want to call it that. But this is bottoming. And then what do we get? Last push, sweep, snap back into the range, drive higher. I mean, these are huge moves. These are like, well, this is SPY, but I mean that's a over 40-point move on the S&P. What do we get? Bottoming, last push, snap back in the range, trade higher. It's like it's every single day. This doesn't change, and it's all based on gamma levels and how the dealers are hedging at those levels. Once you know that, you literally can make as much money as you want. Today, high gamma level we're looking for, right? We didn't even break past it, just to the penny. Negative gamma level sometimes will overshoot if we're in a high VIX environment. So when we're up here, high VIX, yeah, we're going to get overshoot, but we had a strong, steady decline into VIXpiration. We have that new contract tomorrow morning, or this morning. It's pretty late. I went to pickleball tonight, but we're more liquid. The VIX sold off. So this is good. This means the market is becoming more liquid, meaning buyers and sellers are more in agreement on price. They're closer together rather than further away, right? When we're in a high VIX environment, we're illiquid. Sellers, buyers, they're far away. So price expands on the range, right? It's tight. We're not really getting a whole lot of buying, a lot of selling. And so what do? We go find buyers because we're illiquid. That's why we get these huge ranges, right? When price is liquid, look at the difference. It's when you get the consolidating chop and everyone's like, oh, I hate trading chop. Volatility will blow right past you, and the candles are huge. So it's, people will oversize, but it's just knowing in what environment, how are we, to react. It's like if you know the pitcher is going to give you a fastball, yeah, I mean, you still got to hit it, but it's going to be a heck of a lot easier if you know a fastball's coming every time. So anyways, yeah, that's below the gamma flip, negative gamma environment. Dealers are selling into selling and they're buying into buying. So we're really looking for exhaustion there. In a positive gamma environment, we can get away with, I don't want to say being sloppy, but we can be a little bit more sloppy. You see any buying here, you're not going to get punished. When the VIX is low and we're in a positive gamma environment, you're not going to get punished for buying too soon. You could buy here as long as your stop loss, isn't trying to be so pinpoint tight. You're going to get away. You could have added here, could have added once you got this wicking, could have added once we swept the low, and you're in a lot safer position because the dealers are going to be buying it up as it sells. So what do we get? We tap the level. Dealers are going to be selling into the strong gamma level. We didn't really have, we had some gamma levels higher actually. At 675 ended up building pretty high, so that's why we had that as a target today. But 672 is a high positive gamma level that we had. So dealers are selling. You have the buying weakening out. So we get a push. What do you get? Dealers buying it right back up, right? We get away with a lot more. So anyways, just want to show you that on the SPY levels. Pretty cool. Why more people, like, why everybody isn't trading this, I have no clue. The last thing I'll show you guys is, I gotta minimize that to bring this over, but is the Bookmap. So this was at the 9:30. Actually, you know what I can do? Is I'll do this. I'll minimize it and I can show you both. Blink. Oops. We'll do that. And we'll do that. And what I'll do is I'll bring. Sorry, it's kind of impromptu. So what we have here, I'm just gonna leave the SPY chart up. The ES is the same thing. It's just the numbers are different, but it trades exactly the same. So if you want to see, oops, I actually rewound this because I was going to show you guys if we, not in hindsight, like what we had, you know, before 9:30. But as you can see, you got to use a conversion. I just kind of eyeball it as price approaches it. If I can match it to the strike, I'll do that. I have dynamic levels from Matt with Rocket Scooter, but I like using my own gamma levels as well and understanding the environment that we're in. So that way I'm not just blindly taking a level. Maybe I'm looking for an overshoot or something like that. But anyway, so we had the London sweep, which I know like some people trade that, but look where we tapped. It's the SPY gamma level. So it's the same exact thing as the SPY. So I'm just gonna leave that. And then we're gonna go over to the Bookmap, and this was at 10-ish. So when we got that reversal, right, it was actually at 10:02. So you can see 10:02, that was the bottom. I just want to show you what the Bookmap looks like, because a lot of people, you know, are getting interested more in like the order flow. I know the Fabio guy or whatever had that video that went pretty viral. But when you understand the gamma levels and the dealer hedging model, like what the big boys, right, the market makers who actually make the market, what they're going to be doing and at what levels, and then you can pair that with order flow, it makes it way easier to trade. So at open, right, we're here at 9:30 right here. So then pre-market, like I know some people do whatever, mark stuff out. I don't really care for pre-market levels. I will mark the overnight highs and lows, but I'm just watching order flow and the gamma levels, just keeping it simple. Less is way more. So we got a little selling push, right? 634 at 932. That's not like a huge amount of volume by any means. That's actually a very small volume. But we don't really have much selling going on in here, right? Sorry, I'm slowing down here. And then we're seeing buyers trying to make a push and they're getting stopped, right? I don't have any resting limit orders really sitting here, but they're obviously being absorbed. This isn't a lot of, you know, buying activity to be absorbed. Like 1,000, you know, volume, that's sizable, right? But in the hundreds at open, that's not a lot of volume. And I just know that just from obviously watching order flow. And you'll see on here, like, if you guys are familiar with heat maps, like the darker the color, like orange, and then obviously red is going to be, you know, like red is going to be a larger order. You can see 169, 168 on the bid right here versus orange is like 92, so closer to 100. So anyways, and the bigger the bubble, the larger the volume. You can just glance over it. You can see the volume and at what price. So anyways, at open, we see it's making a little push down. Low volume, we got a large volume spike of buyers, and we get a little push up, not really getting anywhere. We sell down, larger selling volume, right? And what do we get? And I know this is just on like a little bounce, but just to show you guys, this is a larger volume, right? And then we got a push lower, but look how much smaller just the bubble, if you want to just go off of shapes and colors and patterns, right? Look how much smaller that bubble is compared to that one in the volume. You can just glance over it. 916, just say 1,000, right? If you want to pair it with this other one right here. So about 1,000. And then you have 200. That's not a lot of follow through, right? So that's a sign of exhaustion. We get what? A bounce from 67 up to 71. It's a 4-point bounce. I trade typically 2 contracts or 20 micros. I mean, that's $400 right there with, you know. Once I saw that, we got right above it. Like that would have been a 1-point stop for 4-point, you know, even if you trailed out, that's like at least a 1 to 3. So I would have eyeballed it going into this consolidation, but and just trailed with it. And then we got a stronger push of volume, right? Bounce. What do we see? Exhaustion, dying out. Buyers are not picking up here. So what do? Trade lower. Sell volume pushes, right? Larger volume, 276 compared to 112, but that's not a whole lot of volume. And what do? We hit this limit order that got absorbed, right? Not a ton of volume. Once we got above this order, this seller and this order here, good little push up. Just little things with order flow that you can pick up. Larger selling, didn't really get anywhere. Hit this limit order, large selling, boom. Runs into these sellers, pushes lower, okay? So most importantly, once we approach our level, we're not just trading every single little bubble and candle and everything like that. You'll just be a spasm, you'll lose your mind. But we saw a larger order resting here. So we had an order of, you know, let's just say 120 and a few other little ones in here, 74. So about 200 or so contracts resting here. We got to push into it, 373 contracts, right? And then a little bigger, 634, didn't really get anywhere. We're getting some type of bottoming here, right? 363 contracts going into our pivot. Typically when we go into a negative gamma pivot, we're seeing a lot of volume and it's going to push through and it's going to be violent. This is super low volume. That just tells me we're just lollygagging it. And if you saw 1,000, that's when we're looking for it to push past it and we're looking for that strong reclaim. 300, we hit this limit order, got filled, absorbed, and then once we got it back above it, we get a retest of this order, boom, I'd be in right here at 62 with my stop below this order. 59, that's a 3-point stop. Let's just say you wanted to put it down here, you could put it below this seller and take it for a run up. And then what do? We're just looking for exhaustion, and this is just weak. This is weak selling. You're getting a lot of buying and bottoming here. You're looking for a last little push, them not get anywhere. With our level, most importantly, our gamma level, and then we get a push higher. Right? Same thing, buyers. Probably hit a seller up here, right? A little bit of selling in that consolidation familiar. Selling, doesn't get anywhere. We got exhaustion, we push up above it, and then we trade higher. Man, I'm so tired. And then once we got up here, we got to one of our gamma strikes. This was at 1022. I bet this is at 1022. What do you know? Larger volume, right? 430, 377. We got a larger volume. We hit this resting limit order. We're getting absorption, right? Right below our strike. And also we're in a positive gamma environment, so we know the dealers are hedging by selling into buying. And then once we got this large volume, we got larger volume of selling coming in. This guy's trapped. You could enter short here, put your stop above the trapped buyers and take it for a run lower. I'm not really looking for shorts. I'm just looking for longs. What do we get? Stronger volume, last push. Look how much smaller these are. 99 and 68 after you have collectively 1,000 in volume at this level, and you're getting no added volume here. Immediately, once you see this weakness, I'm pressing buy. I don't even need it to get down to this buy order. Completely irrelevant. There's no sellers to even push it there. This thing is dead. Or you just wait till once we get above it. You could just see this exhaustion. You could put a limit order on your, on your Tradeovate or whatever, right above 65. Once we just break past above it, put your freaking stop at 62 and just let it go. And what do you know? Once you get the buying volume in, we're gone, right? Ripped higher. Large volume, but what do you see, right? No selling coming in, not getting trapped, consolidates, and then it runs higher, right? Absorbing all those sellers, all these sell orders, larger sell orders, absorption, right? So that was a little quickie intro into the day. I'll post more videos, but just wanted to share with you guys, on the gamma and what that's looking like. It's pretty crazy accurate. And whether you trade candlesticks, order flow, whatever, something I teach in the, I need to make the video for it, but one of the things that we teach for the entry model, just for simplicity, if you're a brand new beginner, is right here, gamma level. Last push, we look for that strong reclaim. So if you're trading candlesticks, strong, thick-bodied closure. Even if you're looking at delta divergence, added confluence, right? Here's a low. Here's a low. Price made a new low, but the market buying is going up, showing strength, right? That's what we want to see. Plus, you got a reclaim. Boom, you're in. Stop below the low. You can honestly even put it below the gamma level because it shouldn't really break past it again. But put it below the low, trade higher. We focus on 1 to 3s because these are strong levels. These aren't just for like little quickie scalps. You can definitely scalp them for sure, but we're looking for a strong risk versus reward as well. That's why we use order flow tools and all that. So we just look for a push, right? Push. Lower, strong, violent, selling, snap, quick snap, violent, quick snap, right back into the range. That's the dealers picking up and now hedging, closing out all these shorts and buying, right? And then we're targeting whether it's a 0 gamma flip zone or another high gamma level higher. But anyways, this is definitely the way to hack the market, just by following where the dealers are hedging and how they're going to react at those levels. Pretty crazy. But if you guys are interested, want to learn more, I have my free Discord. It's in all the links on everything. I'll be posting more, and I'll post setups and whatever in there. It's all free. Like, I make money from trading and my other businesses and stuff like that. If you guys need help, just let me know. But yeah, pretty cool. Like, go check it for yourself. If you can't afford like certain tools, checking gamma, I post them every single day. Also, like, game plans around them. So let me know if you guys need any help, and I'm happy to do it. Thanks.